Hey traders, David Frost, MyStrategicForecast. You're here for another episode of Common Sense Market Analysis. Today is Monday, June 24, 2024. We are looking at a daily chart of the SPY or Spider, which is the proxy for the S&P 500. What do we have on the docket today? Plenty of stuff to go over. We're going to date back to last week and refresh our memories of what we were looking for. We were looking for a turn. This was the cover of last Wednesday night's video. Why was that? Because on Thursday was the tinfoil hat event, which was the summer solstice. Now, those of you that choose to can laugh at that information. You can post a stupid comment under the video if you so choose. Can't believe we're looking at the summer solstice to determine what the market's going to do. That's not what we're talking about. The reality is that when there are these lunar type events and others, markets have a tendency to trade up or down into them and have a shift. It is the end of one thing, the beginning of something else. This was the summer solstice, the beginning of summer. Well, it just so happens that last Thursday was the recent top in the market, which came in just above 550, a semi-fat round number. Today finishing basically on the lows, down roughly 80 handles on the S&P from the summer solstice high. Funny how that works. What else do we have in front of us? Where are they going? Where can they run a test of? Well, if they continue to come down, they're going to pay a visit at this trend line. Where does this come from again? Remember the monthly chart. This is the high in 2007. It connects the high in 2022, and they will be back to run a test of that particular trend line. Right now, it happens to coincide with the 20-period moving average or home base. What have we been talking about the 20-period moving average or home base? We've been saying when the market gets a little bit far, a little bit extended from home base, doesn't matter which market it is, which chart it is, all charts act and react the same way. What happens when that takes place is she likes to retreat a little bit, come back toward home base, eat some time off the clock, let home base creep up the price a little bit, work off that unmeasurable overbought condition. There's also another number down there at 533.07. That is the most recent breakout area. It happens to be just slightly below the trend line. That's an area that on that visit down, when they do that, that number, that place will be tested because it is the most recent breakout area, and that's just the way the market works. Ask anybody that's been around here for a while. We also know the routine of the way this works. As the market's rising, nobody ever thinks that it's ever going to correct again, right before the point in which the market begins to correct and work off some of the quote-unquote, these are air quotes, overbought condition. Let's focus our attention over here to the red oval on the left. Markets go up, they pull back. They go up, they pull back. They go up, they pull back. They pull back more, they go up again, make new highs. They pull back, they go up, they pull back. You see the pattern? This is normal garden variety market behavior. Nothing is abnormal of the market. This does not have to be, nor do I think it is, the high, the long-lasting high, the ultimate high. I don't think we're there. But it doesn't matter what I think. It matters what Mrs. Market does, and we can interpret what she does to affect our opportunities. That's the way this works. Speaking of which, market's down today. We have one of our swing trades that hit a second profit target. Alcoa AA was bought last week, less than a week ago, at $36.88. $4.27 gain up to second profit, 11.6% gain in less than a week. It's been a risk-free and continues to be, with a third profit target on the board, a risk-free, emotionless trade. Funny how this works. Lazy swing trader, automagical algo system. Same thing with Gilead Sciences. This was an exit on Friday. Trade alert issued at 64.29. Second profit target 71.55. Equals roughly about 11% also. These are good short-term swing trades. They worked. Back to the spiders real quick. Traders in the live room will hear me discuss this tomorrow inside the number members. Basically, down here is our line in the sand. It opens the door, and we'll call this low here 539.59. It opens a door to come fill the gap. If they're coming to fill the gap, they're very, very close to the trend line, which will become magnetic and draw price in. Below the trend line, you have the most recent breakout area, 533.07. Around the trend line, down to 533.07, 533, maybe even a little spike of 533 is bona fide chart support. Inside the number members, live room members will certainly have new and refined information as the market dictates tomorrow. Those of you that remember the videos from last week, you can go back and check the videotape. We were talking about an on-time situation from a daily chart perspective, and we were talking about an on-time situation from a weekly chart perspective. Funny how this all works, isn't it? What about inside the numbers today? Well, we had a happy Monday, up a little, down a little in the overnight session, no big deal. They were hanging around the flat line. We identified an early pivot, 544.45. Let's start there. Above the pivot, she's bullish. Below the pivot, she's not. You could see the roll that the pivot played today at 544.45. Here's the opening stuff down here. Tried to get below, pop right back up, came back for a retest-ish around mid-morning, never really got there. And then once they got below it in the afternoon, you could see they tried to retest it from underneath and were summarily rejected. 544.45 was the pivot. Did we have traders riding the market long when they busted over the pivot this morning? Yes, we did. Was that for everybody? No, it wasn't, but we do have traders that are comfortable in that trade. We have what's called something for everybody in the live room. There are traders that absolutely love short trades. There are traders that don't like short trades. There are traders that like momentum, traders that like to buy support and sell resistance, and everything in between. Traders that like stocks on the move, traders that like futures, traders that like commodities, traders that like options, traders that like anything that moves. We have something for everybody. Staying above the pivot would ultimately keep the door open for 547.15. They came up a little short, but they came close. They filled a gap basically to the penny, and my number was slightly above that by about 20 cents. They filled the gap and they fell away, never getting to my ultimate place. On a sell-off, on the flip side, we were looking for 542.30 down to 540.90. That was a support zone. And as you can see, into the end of the day, they were headed there, but they came up short, almost equidistant to how much short they came this morning versus this afternoon on close. Funny how that works too. We'll have new and fresh numbers tomorrow morning. Pause the video, read the notes, go back to the chart, and double check the work. We were willing to sell 547.15, willing to buy 542.30. Neither of those two things happened, but that doesn't mean there weren't trades. There were different trades for a variety of different traders in the live room after the opening bell. This is the pre-market stuff. This is the morning schematic. We start with the pivot. What are they doing? Are they above the pivot? It's bullish. Below the pivot is bearish. Where are they going in either direction? And we start there. Pause the video, read the notes, go back to the chart, and double check the work. It's all in here. Everything that traders need during the trading day to be successful in trading the markets. We had some stocks on the move. We had RMD, Coin, CleanSpark, and GME. Couple hit their entry objectives. RMD and Coin, CleanSpark, and GME I don't believe did, so they're off the table. We'll take a look at the ones that triggered. Here's ResMed, RMD, missed it early on around 10 o'clock in the morning, came back down for another bite, had a nice bounce away from it, did the deal, but do you want the trade after coming up close, or do they take the luster off the number? Again, this is the process I use. What I'm doing here is displaying that, quote unquote, the numbers work. About Coinbase, as Bitcoin was getting taken out behind the woodshed today, Coin Down, Coinbase down. 215 was the first number. First candle of the day comes to a low of 215.15. Has a rocket right away. Just minutes later, they're at a high of 221 and change. They didn't do the number, but the numbers work. We're splitting hairs over pennies, but you can see here they were supportive in that area. Came up short of the second number, 8 time off the clock, proceeded down to the third number, 207.95, bounced away for the rest of the afternoon from 207.95 or just pennies below that. The numbers work. What's going on over in Camp IWM? How about being stymied by the convergence of 3 moving averages? The 20, the 100, and the 50 period moving average are overhead resistance until they're not. How are they not? If price can get above, stay above, close daily for starters above the 20 period moving average. In this case, that's the top one. That's what it would take to put these moving averages back into a position where they're underneath price and supportive of price. Right now, they're resistance of price. Or maybe price is resistance of the moving averages. I'm not sure which way you have to say it, but hopefully you get my point. It's a shtick. Now, when you look closely, or not even so close, at Camp IWM, you'll notice they were up about 0.4% today. My favorite market leading indicator is that Mrs. Market trying to tell us something. We have it. It's of note. It's a puzzle piece. It's on the table, but we have to look around the horn and see what else we have. Like the folks down at the transportation department, also up 120 points, 0.8%. Favorite canary in the coal mine, second favorite market leading indicator. Do we have a handle on something? Is something bullish out here? Are the S&Ps going to turn around in the northern direction again? Divergences will be resolved. Either the S&P is going to turn around and go up in accordance with Team Transports and Camp IWM, or vice versa, IWM and Team Transports are going to turn back down and follow suit with the S&P. One day at a time, one candle at a time. What about the Q people? For whatever reason, my Q chart's not working. The NQ is just as good. It's the same routine. And you can see here, they're coming down. Down 236 points today in the NQ. The Qs themselves were down $6 today. So something's going on. There are divergences out here. The SMH got smoked as well. The SMH, or Philadelphia Semiconductor Index, is a pretty darn good proxy for the tech space as a whole. So if tech's going to come down, it's likely going to pull down the rest of the market with it. Here, we got the Q chart back. Insights is the 20 period moving average. You have a gap down here, same routine as the spiders, no man's land, gap, last breakout area down here, 461 and change, below the 20 period moving average. All charts act and react the same way. Where have you heard that before? What about the XLF? Above all the moving averages, trend is your friend. They're back above them as of last Thursday, stayed above Friday, above today. The trend is your friend until proven otherwise. It's a pullback in an uptrend until proven otherwise. Above all the moving averages, nothing wrong with the tape. Here's the weekly chart. Above all the moving averages, specifically the last one is the 20 period moving average. They tested it. The next week, closed right back above it, and here we are. There is nothing wrong with the financials as long as they're above the weekly, all the moving averages, namely the 20-week moving average. The trend is your friend. The trend is up in the financials. Pullbacks are normal garden variety market behavior. About smash mouth, right into the 20 period moving average. A gap over here. Below the gap, we've got 250.85. That's the most recent breakout area. The semiconductor space in terms of the SMH is ahead of the power curve on some of these other markets. It's leading the trip downward. Way extended from home base on the weekly chart. We talked about this. Home base is your 20 period moving average. Was all the way up here, put in a tail, sign or signal of a trend change. Here we are the next week trading lower. That's the way the market works. Eating off some of the quote unquote overbought condition. Just so happens 250.85 happens to coincide roughly with the last weekly chart breakup candle low right here. Funny how that works. Weekly chart breakup candle low. Daily chart breakout area below a gap, below the 20-period moving average. There's a lot of reasons why Mrs. Market would want to find support in that zone, isn't there? Write that down, put it on a sticky note. Have I told you how much I appreciate each and every one of you? Without you, these videos are not possible. That is true and accurate information. We're pulling the ripcord here today. I'm David Frost, My Strategic Forecast. Thanks again for tuning in to another episode of Common Sense Market Analysis.